Welcome, welcome, welcome. We are back another day in the market, and we are seeing the greatest market rally since I believe 2021 in under a month. So right now we close the day pretty flat. Really take a look at the daily candle, a little bit of a doji here. Now tomorrow somehow, if we get a small gap down or whatever, and a candle like that, okay? If we see this tomorrow, right? See a candle like that tomorrow. This could be an abandoned baby reversal candlestick. You know, you're 2/3 of the way there, but it really doesn't mean anything until you get the final candle. So keeping a close eye on that. In terms of what's happening right now, we talked about the pattern completion zone of this bullish bat, pretty much around Halloween. Pretty ironic you had a bat around Halloween, and it's played out now. So I'm going to take it off my chart. And what you pretty much have done is you went up to these highs over here, this resistance zone. Okay, this dates back to 2022 in February. You went up to that level, then you pulled all the way back down to our resistance from February of this year, and now we're back up retesting the same level. So if we go to the 4-hour chart, this is what I was talking about earlier in the week. This breakout test, you ended up actually gapping above the trend line of this falling wedge. And what you did today is you went up and filled this gap from the gap down on September 15th. So that gap was actually filled, and now you are facing resistance. We saw a pretty decent high here on the first day of September. So if you can break above that, you'd have another gap fill up at 456, as you can see over here. But the moral of the story is, number one, we are approaching resistance here. Okay, this dates back to literally September of 2021. And then number two, you're not quite there yet, but the RSI is getting close to being overbought. The last two times it was overbought was right over here, and then at this high of the year. If we go down to lower time frames now, I want to talk about the potential for all of this. Actually extend this over just so I have it. A little bit of chart work right now. I want to talk about the potential of all of this price action since we put in our high at the end of July to actually be a bearish harmonic. So take a look at this. This resistance also on the 1-hour chart is lining up with the pattern completion zone of a bearish shark. You know, it would be somewhere around that 452 price range, which is the perfect resistance level. Right, if we really zoom into this yellow zone here, look at this high, look at these highs over here, look at these lows. You're approaching that, and of course, you also have classic bearish divergence on the MACD and RSI. So if this plays out, I think at least a pullback, maybe down to the lower 440s to fill this gap up from Tuesday should take place. The CEO of Chase actually came out and said that he thought our reaction to CPI was a little bit too ahead of ourselves, and that it's not as good as it seems. Everybody has their opinions. I'm just talking about what's going on the chart. So we will see what happens. Max in the chat says, you ever use extend right option for rectangles boxes on TradingView? I didn't even know you could do that. How do you do that? Please send me a DM on Discord, because that would help a lot. I literally take out all the time to extend every single one of these zones. So that would help a lot, especially on my other time frames. What is it? On my 15-minute? Yeah, I have a bunch of zones on my 15-minute time frame that I have to keep extending. All right, so that's the SPY. The Qs are, okay, let's go over to the weekly. Qs are retesting the pattern completion zone of its bearish shark. So the SPY, we just talked about that bearish shark on the 1 hour. The Qs have a bearish shark on the weekly time frame. And you have your type 1 move, which is typically when you first hit the D point, a little reversal you get. And then you have your type 2 move, which should be the actual reversal. Okay, so if we start rejecting this area, you could get the type 2 move if this bear, I'm just talking about in terms of this bearish shark, if that plays out. Now here's the thing, bulls do have a little bit of, not a little bit, a decent amount of variables going for themselves, all right? If for the next 2 days to close out the week, we can hold up the gains, you would therefore have a 3 white soldiers bullish candlestick pattern on the weekly time frame, and then you also have hidden bullish divergence that is honestly, like, it's looking beautiful on the weekly right now. I don't know the last time there was hidden bullish divergence on the weekly, but it is looking very nice. Okay, and if we're just going to delete everything off this chart for 1 second, yeah, you do have that bearish shark, but it's just contradicting variables, because at the same time, and this is what we were talking about a while ago, you're also kind of breaking out, not kind of, you already have broken out of the handle of this cup and handle. Okay, if you want to make like an overall neckline, then you're actually testing that as we speak. So it is such a big make or break area on higher time frames. I actually don't remember, but I want to see if the SPY also has a bearish harmonic. You could probably look at this as one as well. So we're really at the point where we're going to see, yeah, it's pretty much a bearish shark as well. We're about to see whether or not the cup and handle approach to the weekly time frame with the hidden bullish divergence on the MACD plays out, or if the type 2 move of the bearish harmonics play out. I can't tell you which one. It is quite literally a coin flip's chance. So we're going to see. But that's really what to look out for overall on the weekly. That could take weeks to form. If you saw what I put in the Discord and on X when I talked about going live on the stream, is that we could see a pullback soon. All right. What I'm showing you on the weekly time frame right now has nothing to do with that pullback we could see soon. The pullback we could see soon is simply because of what I was talking about. Let me take this off the daily. What I was talking about with this bearish harmonic on the 1 hour time frame, alongside the potential overbought RSI, and then also the fact that the Qs are retesting as we speak the highs of the year. All right, that's what I'm talking about with the short-term pullback. The weekly time frame is a whole different story. That might not even be in effect until December. All right, another 2-3 weeks. Continuing onwards, Russell 2000 had a pretty good start to the day today. It's been a pretty nice rally. I know a lot of people are viewing this recent price action as an inverse head and shoulders, and you kind of gapped up after hitting the right shoulder. Good volume between yesterday and today. It's your highest buying volume for small caps, I believe, since pretty much 2021, or technically January of 2022. Pretty much since you got down here initially, this is your highest buying volume. It looks like, yeah, it is exceeding the buying volume of March. And you had a pretty decent rally off these lows from March. Today you did end up hitting the 200-day moving average, however, which is this yellow line over here. You can see it does actually respect it pretty well. We look back into the past, a lot of different times you've tested it and reacted to it. And not only did you pull back at the 200-day moving average, you also got a shooting star on the daily. So the question here is, does this potential inverse head and shoulders play out? And what I'm talking about is pretty much this. Does that potential inverse head and shoulders play out and you break above the 200-day moving average and go back up to the top of the zone at 200? Or do you have the shooting star play out and go back down to fill this gap over here from the gap up on Tuesday? A lot of 50-50s here. The ARK ETF also broke out of the 200-day moving average, and this wedge is not a great pattern, honestly. It's probably better like that. But even if you want to look at it like that, it had like that 1 week consolidation I was talking about on Monday night's stream, and it broke up from it. So pretty good relief in a lot of names. Swings are doing well. Great day today for Mara, which is now back in profit. Hopefully the third time's the charm. Bitcoin, we're going to get to that in a second. But yeah, the Mara swings back in profit, testing the 200-day moving average again. It's really done a pretty good job of holding this support over here. Riot as well, kind of almost back to even, testing the 200-day moving average. If we take a look at Bitcoin itself, beautiful pullback. You pulled back for like 3-4 days, and then you engulfed all the pullback today alone with a 7% green day and a very small amount, but it is an actual setup of hidden bullish divergence on the MACD. So testing highs of the year right now for Bitcoin again. I think about 40K is your next level if you take a look at this low from September of 2021. So I think this should see some more upside. It looks good to me still. You're making higher highs, higher lows. The trend is still intact. Ethereum as well, with a nice bullish engulfing candle to reclaim the $2,000 support level. It was looking a little bit fishy on Tuesday, but it's back above it now. Hopefully it gets up to hit that second target at 30% profit. And even some premium swings really are doing amazing. We have the coin swing in premium that's retesting the second target at up 30%. The U swing, I literally alerted this last Friday in premium. It's already up 20%. I alerted it right over here as soon as I saw it breaking back above this support level after earnings, and it's broken out of this wedge. There really isn't much resistance until like 33 because of this low in the 200-day moving average. So the U swing is already up 20%. Good stuff on the swings. It's not hard to find good swing trades right now with how much the market is ripped, but you know, these were put out a little bit before the crazy moves in the market. And yeah, let's talk quickly about some other markets before I'm gonna just go over a bunch of random stocks on my watch list. If you're in the chat, say what's up, hit the like button, subscribe button. What's up, Frank, Max, Papa Strata, Brewer? I will take a look at GNS in a few minutes. And did I miss the extend right option, Max? I don't know. I might have just looked right past it. All right, so the US 10-year, this might be due for a bounce soon, which kind of aligns with the potential pullback I'm talking about in the market. A little bit of a wedge forming here. We will see. The VIX as well. If it makes any low higher than like these lows at 1260 or 1270, that would be very interesting. Because if we kind of zoom out here, it's got, while the SPY has that bearish arc, and I'm going to go show it to you again, the VIX actually has, believe it or not, a bearish arc. So take a look at this. The VIX has a bullish arc on the daily, and then the SPY also has a bearish arc. And they're not quite there, but they're getting to just about that point right now. Not a great continuation move for the US 2-year. Let's take a look at some other stuff. Gold lagging a little bit here. Interesting. Dollar currency index, I did not see this, but on Tuesday, this fell 1.5%, which looks like the worst day for it. Maybe the year. I'm sure this was a horrible like streak of days. I don't see any day that's over 1.5%. That might have been the worst day. Definitely related to CPI. And you actually broke out from you broke down from a bullish pattern. So I guess that classic bear, this is why we love MACD divergence. I guess that did play out. So there you go there, okay? There's also the lift swing, I forgot to mention that. This is available to everybody in the Discord, links in the description. This was a free alert. It's currently up about 5%. It's testing a breakout of this down sloping channel, and it's also testing a break above the 200-day moving average. If this really gets going, there's room here. I really think there's room here. Like if we zoom out here, there's a lot of room in my opinion. We'll see, okay? Fisker, not so great. But what it did do post earnings was kind of put in this inverted hammer. It's like an inverted pin bar candle. I do want to mention, take a look at the buying volume. All right, I came in on Tuesday after earnings Monday evening. Let's see in terms of numbers, 41 million shares traded, and you technically closed the day down 18-19% because of the gap, but intraday you closed higher than you opened. You know, that's your highest volume on the daily since Monday, February 27th, which was this low over here, okay? I am seeing some people flirting around with the idea of Wyckoff accumulation. If there were to have been Wyckoff accumulation, it should have played out like this, all right? Should have played out like that. It did not. This is not Wyckoff accumulation. It's just in a short-term downtrend, okay? Personally, I think $3 is a steal on Fisker long-term. I could be wrong. I know I've said that twice this week. All right, let's run through some names on my watch list now. Tesla, the beautiful move. I shared this on Monday night stream. Look at that inverse head and shoulders. Went right up to that gap fill and pretty much just hung out there for the rest of the day today at 242. On the daily time frame, we zoom out over here. Just look at how nicely this support zone I've had charted for months held up. And then if we go over to the weekly time frame, just move this down a little bit, the inverse head and shoulders is still very, very real for Tesla on the weekly. And you got the bullish engulfing potential to close out the week. All right. We also zoom out here, keep an eye on that supply line, maybe a little bit of a larger wedge forming here. So we will see. Let's keep going. Just in my watch list. NVIDIA, a little bit of a tough area to tell because one, earnings are coming up soon, so that'll probably be a very big indicator. But it did break above like these highs over here and this high over here, but also rejected like the literal all-time high. So really it's just a question of, does it break above this first or does it break back down here? Okay. Amazon down a couple percent. Bearish engulfing candle. It did fill the gap from the gap up yesterday. This is a very important make or break area for Amazon. This level was your highs in August of last year and just a couple months ago in September, and it was also your lows throughout fall of 2020. This is probably the biggest level on Amazon's entire chart, okay? And honestly, this kind of looks like Wyckoff distribution, this whole entire range over here. So now it's retesting the same area that it broke down from that Wyckoff distribution. as a resistance. Apple, a little bit of a shooting star candle today, kind of matching these highs from the beginning of September. Netflix, I like how it broke above that resistance at 450. It's got a gap fill and a little bit of a level right here. So this is just a make or break zone for Netflix. You can see where a lot of these charts are just at huge make or break areas right now. Google, kind of in the middle of nowhere. Honestly, that's just a coin flip. Microsoft, second day holding above previous all-time highs from July. Very interesting. Coinbase, we already looked at that. And yeah, it's pretty much what I have on my watch list. Beyond had a good day today, up 7%. It's not really much of any harmonic, but I guess I just charted it for fun. I mean, maybe some people look at this as a bear flag, I guess you could. But this is just in general very interesting setup. You get like this big, large plus 18% candle on volume. Start to create this wedge. If it can really crack above like 760, I'm going to set up an alert. It has room. I think it has room if it cracks above that level. It's in a very, very deep area right now. You know, it could go deeper, but yeah. All right, let's take a look at GNS now for Brewer. Let's not look at Forex. Genius Group Limited. Why does this sound familiar? You got classic bullish divergence on the MACD on the daily, kind of on the side too. The big level is 51 cents, all right? You reversed off that in August. You just reversed off it a few days ago. That's a big level. You want to see it continue to hold. This is kind of like an extreme wedge here. Something like that. Broke out of it. Now it's going up a little bit. Your next major isn't like $1.19, although you do have a little bit of a zone here because of this low and this gap fill pretty right there. Let's take a look at G now. G. I want to go on the weekly for this one. See if there's any panic. Not sure. Let's take a look. It's tough. Like, where do you want it? I mean, it's kind of like a cipher. I'm not sure if it's hitting the exact rubrics of it. Regardless, what it ended up doing was dropping down to about a 786 retrace. Now it's bouncing off of that. In terms of like levels, really have to just kind of stick to the weekly on this one. I know you're talking about the 15-minute chart right now, which is very different. But like, yeah. Like this 105 level is pretty big. It was a very big level in 2018. And then really just when it breaks above 105, it goes to 182. When it breaks under 182, it kind of went straight back down to 105. So you do want to just talk about this like short-term 15-minute time frame. I'm not really seeing a cup and handle. I mean, I guess there is a cup and handle, but it already broke out. Kind of like that. So I guess there is one. It's just it's already played out. That's what you wanted to talk about. But yeah, I guess on the 15-minute, 122 is the key level to hold for right now. Broke above that, you got a very nice move up. Now you're going back into it. You'd like to see that flip into a support. All right, so that's it for tonight's stream. Again, just doing the quicker streams for right now. I will take a look at one more. Mugs wants to look at DE on the 4-hour. All right. Looks like it's trying to break out of a falling wedge. Yes, it does. It looks like it might have already started the breakout, actually. I like the high or low above 350. Very important level. Very interesting high or low there. It might even have, no, it would be a mix of two harmonics. So it'd probably be a mix of a bat and a Gartley. Yeah, it's not a textbook harmonic, but it's got the B point of a Gartley and the point of a bat. But yeah, it's testing a breakout. Okay. So thank you for watching the stream. Hit the like button, hit the subscribe button. Just a reminder, there still is one 2023 30% off lifetime spot if anybody wants that for premium. Let's go over here. All right, this is usually $850 for a lifetime, and you can get 30% off that, and you're set for good as long as premium is alive. I can't promise it's going to be alive for the next 100 years or however long, but as long as it can be live, it will be. And if you want to be in set for good, never have to pay again, there's a 30% off spot. Saves you hundreds of dollars. If you want that, it's I'll drop it in the chat, I guess, too. But it's in the announcements channel in the Discord. And yeah. All right, have a great night, everyone. See you on the stream tomorrow night. Thank you for watching the stream. Those of you who watch the stream, you're the realest ones, and I really appreciate it. And yeah, good luck in the markets tomorrow.